All right, welcome back to Play of the Day. Hit a like and subscribe for that algorithm. Please do. If you find any value in this content, go ahead and share it with your friends, your family, anybody that you want to possibly level up or that you think could benefit from this kind of content. We are back at it. It is Monday, and today we're going to be going over a very, very special dividend ETF, something that is very, 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 very new to the market. And you may have heard of it, you may have not. That's how new it is. It recently came out this month. At the beginning of this month, this ETF dropped. And before we get into it, I want to explain what a dividend king is, because that is what this ETF is centered on. This ETF is called the Dividend Monarchs ETF, and the ticker symbol for this is KNGS. Once again, that ticker symbol is KNGS. And so before we get into it, I want to scroll over here to the Motley Fool so I can explain very quickly what they think and what they say a dividend king is, so that we all are on the same page. All right. So dividend kings have a long history of delivering market-beating returns for investors and proving generally steady, safe holdings. A dividend king is a company that's grown its dividend payment for at least 50 consecutive years. Again, that is 50 consecutive years. Now, you may have heard of dividend aristocrats, and then those are dividends that have paid at the companies that have paid dividends for 25 consecutive years. But 50 years gets you on the dividend kings list, okay? And these are companies that pay and then grow their dividend every year generally, and they have sort of the sort of characteristics that investors look for. 1, durable competitive moats that help them generate steady profits year after year. 2, some ability to grow earnings per share over the long term, which means you're still getting appreciating capital by holding that asset. 3, prudent board members and management that prioritize returning excess profits not needed for reinvestment back to the shareholder. So, what is a dividend king? What's the most exclusive group of dividend stocks? It might not be what first comes to mind. Dividend kings, again, 50 consecutive years of dividend payouts, and not only payouts, but growth. That's very important. It says many investors are familiar with the dividend aristocrats. These stocks are members of the S&P 500 that have increased their dividends for at least 25 consecutive years. But there's an even more elite group of dividend stocks that doesn't receive as much attention. Dividend kings don't have to be members of the S&P 500, but they must reach an ultra-marathon-like dividend streak. At least 50 consecutive years of payout growth. Here's what you need to know about the Dividend Kings of 2023 and how they can fit into your investment portfolio. Keep in mind, I started a passive income challenge with this portfolio. Right now, I believe it's sitting at $27 a month. Roughly, that is bringing me in a passive income. That is a specific dividend-focused portfolio only that I am building up through the public app. Again, you might have to go back a couple of episodes to get caught up on what is happening with this portfolio and how I'm building up and what I'm investing in. But let's read this here. It says, here are the 54 stocks that have qualified as dividend kings as of November 20 of 2023, including 2 unofficial dividend kings that qualify depending on how you interpret dividend growth. I am not going to read through all 54 stocks of these, but I am going to read the first 10. Starting at the top, we have American States Water, that is AWR, and they have had a dividend increase streak of 69 years. We have Dover Corporation, 68 years. Northwest Natural Holding, 68 years. Genuine Parts, 67 years. Procter & Gamble, 67 years. Parker Hannifin, 67 years. Emerson Electric, that is 66 years. 3M, 65 years. Cincinnati Financial, 62 years. And Coca-Cola, 61 years. As you can see, the list goes on and on and on. You'll see Johnson & Johnson there. You'll see a lot of not of other a lot of other companies that you will definitely recognize: Colgate, Palmolive, Hormel Foods, Stanley Black and Decker. These are all companies that I'm pretty sure that a lot of you are familiar with. But the list goes on and on and on. You'll see Target, 52 years, nice. You'll see AbbVie, one of my personal favorite stocks to invest in, sitting at 52 years. You'll see PepsiCo down here at 51 years. So the list goes on and on and on. But again, that is what this ETF is centered around. Now, let's go back to the website that explains what this company is all about. These are the top 5 holdings that you are investing in, which means that these are companies which probably has the most amount of influence on this portfolio. So you see Legit and Platt, and then you'll see 3M. You'll see Federal 1962, you'll see Black Hills Corporation, and then you will see Black & Decker. Those are the top 5 holdings, okay? Let's read their overview. The Round Hill S&P Dividend Monarchs ETF is the first ever U.S. listed ETF to track the performance of dividend monarchs, an elite group of U.S. blue chip companies that have grown their dividends for at least 50 consecutive years. And down here is going to give you a little breakdown of what the requirements are for a company to fit into this dividend monarch ETF. So we already know the 50 plus years of consecutive growth. We're going to need a 3.51% dividend yield for the S&P Dividend Monarchs Index. That means they got to have at least 3.51% in the payouts, right? And then you will see 0.78 beta of the S&P Dividend Monarchs Index, okay? So let's read their investment strategy. The Round Hill S&P Dividend Monarchs ETF seeks to track the performance before fees and expenses of the S&P Dividend Monarchs Index. And here, I want to scroll all the way down so we get some fun details. Again, this was launched on the 2nd of this month, the 2nd of November. So this is very, very new. You see the ticker symbol there. Again, KNGS. The expense ratio is 0.35%. Again, that is 0.35%. That's not too bad. Again, this is something that has to be, again, actively managed. And anytime you're dealing with an asset in the market that has to be actively managed, which means that there's a team that has to look over this, keep up with it. They have to update it. They have to take stocks off. They have to put stocks in. They have to keep a close eye over what's going on, the performance and tracking and all that. Anytime you're dealing with a company or a stock that has to do that type of work to keep up with this, there's going to be a fee associated with that, because nobody is doing this for charity. Nobody is doing this for free. It's going to cost. And right now, that expense ratio for this particular ETF is 0.35%. That's not terrible. Okay. You'll see the shares outstanding right now is 40,000. Distributions is to be announced. Again, they haven't paid out any distributions as far as their dividend yields go, because again, they just released. Okay, so they don't have a history. They have no history. You can see there's been no amount paid. Their first payout, it looks like, is going to be at the end of December. All right, I see 12/26 here is the declaration date, and then you'll see the ex-dividend date is the 27th. The pay date will actually be on the 29th of December. So that will be the first, that will be the first day that they will pay out a dividend, and then we'll see what they are looking like. Okay, so let's go to the performance. Again, it's only a month old, not even a month old. And it looks like it released at $25.10. Closing price as of right now is $26.41. Okay, and if we go over to my favorite website, Stock Analysis, to get a little bit more information, of course it's not that old, but you get to see some of their holdings. Okay, when you click on the holdings chart, oh no, where's the holding? Hold on. Let's go back here. I know they have the holdings here. Okay, there you go. Top holdings. As I said before, 3M, Black Hills Corporation, Legit and Platt Incorporated. I am not familiar with this company at all. Not even gonna hold y'all. Not familiar with that company. Federal Realty Investment, Target Corporation. Everybody knows Target. All of you uppity people that shop there for that expensive ass shit. Stanley Black and Decker Incorporated, Sunoco, Kenvue, Kimberly Clark Incorporated, AbbVie. These are the top holdings. Okay, I believe that's 10 right there. Yep. All right. So those are their top 10 holdings. And if you want to view all of their holdings, then there's an option for you to go through and look at everything that is inside of here. Okay. Which again, they have some very, very solid, only solid companies in here. I saw Lowe's, only solid companies within this ETF. Okay. So that is what you are buying when you buy into the KNGS Kings Dividend ETF, Monarch ETF. Okay. So the overview right now is sitting at $26.41. I am probably going to buy up a couple shares of this whenever the stock market opens. I will probably buy a couple shares, and then we're going to see how this thing performs as time goes on. Again, this is very new, which means there is a higher risk associated with this, just because we do not have any historical data to go off of in order to gauge this, right? Everything is new. We're at the ground level. You're on the ground floor if you're looking at Round Hill S&P Dividend Monarchs ETF, okay? So listen, keep an eye. I will definitely be keeping an eye on this. I am looking to jump in and buy a couple shares when the market opens. Hopefully this has been what is going on? Okay, hopefully this has been helpful to some of you. Hopefully, if you are looking to jump into this one, just be sure to do your own research as always. Research, study. Don't take my word for it. I'm just some guy on the internet that's looking to provide you all with a little broader scope of what is going on out here in the market and keep you up to date with a little bit of everything that's going on. Warren Buffett just came out and he just sold off something. Before we go, because this is important too. You'll see there I was looking up the poorest races in America, and it's black people by far. It's not even a question. Black families are the poorest in this country, and they have been since 2005. And the reason for that is because of our practices, right? What we spend our money on and what we consume as a community is terrible. All right. More on that later, though. Right now, I want to look up before we go. Warren Buffett just sold off a bunch of stocks. Okay. Yeah, this was 8 days ago, and this was pretty interesting what I found. Warren Buffett sells $8 billion worth of stock. I wanted to highlight the things and the stocks and the positions that he sold on, because they were kind of interesting to me. I'm not gonna lie to you. I believe that JNJ, which is Johnson & Johnson, for those that know, Johnson & Johnson was one of the positions that I believe he sold out of. I was trying to find the list, and it doesn't look like I'm going to be able to find it. It doesn't look like it's within this article. Hold on. Okay, here's another article here. It says Warren Buffett led Berkshire Hathaway, which we all know he governs. They sold out of their entire stake in Procter & Gamble. That was just one of them. Okay, that was just one of them. He sold out of Procter & Gamble, and I'm wondering why. Because Procter & Gamble, again, is on that Dividend Kings list with 67 consecutive years of dividend payouts. They've been a very, very stable company. They have performed well for him over the years. So I'm very interested in why he sold out of Procter & Gamble. Let me see if I can find a little bit more information before we get out of here. Just a little bit more. Can we stop? Can we stop? All the pop-ups. Jesus fucking Christ. Yeah. Yeah, here we go. So he sold UPS, okay, United States Parcel Service. He sold out of UPS. It's one of the 5. Procter & Gamble, as I said. Johnson & Johnson. Mondelez, I'm not familiar with that. And General Motors. He sold completely out of all of those positions. He didn't sell off a couple shares. He didn't sell off just a few positions. He sold completely out. And it says that he has been holding each of those for more than 10 years. I have no doubt in my mind that he's going to use the cash flow from those sales to jump into another investment. But it's going to be pretty interesting. I just thought that was very interesting, so I wanted to bring it to your attention. So anyway, look, hopefully this provided you with some type of content that you can apply to your investment journey. As always, be sure to share, like, subscribe, and I appreciate each and every one of you if you stayed around for this long. Appreciate each and every one of you for tuning in. Remember to invest diligently, but more importantly, invest responsibly. And I'll see y'all in the next Play of the Day video later.